Portfolio winners and losers, latest closed trade cycle. Monthly post update 2 of 3. The 16th of June 2026. This update reviews the latest closed trade cycle for the Backseat trader's systematic investment strategy. The latest cycle covered positions opened on the 4th of May 2026 and closed on the 3rd of June 2026. It again illustrates one of the strategy's core operating principles: performance is generated at portfolio level, not by attempting to predict every individual stock perfectly. The dashboard shows a start value of $19,096.81, and an end value of $25,318.14, with realized profit and loss of $6,205.36. The strongest contributors were concentrated in AI infrastructure, semiconductors, memory, and storage. The top-performing closed positions were ARM, up 96.61%. MRVL, up 93.91%. MU, up 84.41%. AMD, up 56.21%. And WDC, up 32.15%. Additional positive contributors included STX, AMAT, ASML, CLAC, ODFL, and INTC. Weaker contributors included NFLX, BKR, GUG, FANG, and ROST. Turning to the Nasdaq 100 market context over the last 28 days. The Nasdaq 100 environment remained led by AI, semiconductor, and infrastructure themes, but with higher volatility. Late May saw renewed record high momentum as AI optimism supported large-cap technology and chip-linked names. Early June then brought a sharp semiconductor sell-off after weaker AI-related guidance and renewed rate concerns, before parts of the market stabilized again as investors reassessed oil, geopolitics, and Federal Reserve policy expectations. The outlook for the months ahead remains constructive, but less one-way. AI capital spending, semiconductor supply chain demand, cybersecurity, enterprise software, and data infrastructure remain important leadership areas. However, higher for longer rate risk, stretched positioning, oil and geopolitical shocks, and crowded AI exposure could continue to create sharper rotations. This is precisely the type of environment where a systematic process matters. The model does not forecast the news cycle. It reacts to relative strength and weakness as leadership changes. Turning now to the May to June portfolio rotation. The June selection retained the core semiconductor and AI infrastructure exposure that continued to show relative strength. The retained or continuing names included AMAT, AMD, ARM, ASML, INTC, CLAC, LRCX, MRVL, MU, STX, and WDC. At the same time, the model rotated out of weaker or less competitive names from May, including BKR, EA, FANG, GUG, NFLX, ODFL, PLTR, ROST, and WBD. New June additions were app, CDNS, CRWD, CSCO, TDOG, FTNT, PANW, QCOM, and Team. This shift broadens the portfolio beyond the previous chip-led winners into software, cybersecurity, network infrastructure, and platform technology, while still retaining the highest-ranking semiconductor and storage names. The rotation is not a discretionary market call. It is the output of the momentum process reallocating toward current relative strength. The key takeaway is straightforward. The latest cycle reinforces the same principle as previous updates. Long-term results are driven by disciplined portfolio rotation, controlled exposure, and consistent execution, not by predicting every trade correctly. For readers who would like to explore the strategy, methodology, and supporting market analysis in more detail, additional content is available at Backseat Trader. For an audio-visual version of this update and previous posts, visit the Strategy Commentary archive. Past performance and back-tested performance are not indicative of future results. This content is for information only and does not constitute investment advice. Investing involves risk, including possible loss of capital.